Bitcoin over 56. All right, it's just one of those wait and sees. But yesterday was a decent day. Decent dividend payments for today. So we got a interesting mix on the opening. Looks like it's gonna. Well, we got 22 minutes, so anything can happen. But it's showing right now up. We'll see if that holds steady. No worries. Not really showing anything negative. But then again, you say the open hasn't hit. So we're just going to wait. That's what we're looking at. See if there's anything in the news that's interesting. Higher gas, yeah. Energy prices boost consumer inflation. You think? What are you doing, buddy? Come here, Sally. Good girl. Look at you. Good girl. Good girl. Yeah, it's on now. Good girl. Yeah. Dog's playing in the background. Got a new pup. He's growing like a weed. Looks like we're going to open quite a bit higher on the NASDAQ, of course. All that money coming back in. In about 15 minutes before they open, we'll go down through. We got a few paying today. We're just checking to see if anything's going to be spiking. You could look at just the NASDAQ if you wanted to. Seems like there's a lot of money coming into the NASDAQ. Of course, we don't know where this is going. We don't know the price is what it is, 68.58, right? So if you're guessing, you know, just because I have a sell limit in there that doesn't mean anything. It just means that I'm going to take profit there. It doesn't mean it can come down, it can go up and stay the same. So don't worry about it. But what you're looking for is if this was to open, say at 72, or you had it priced out, you could take advantage of that move above it and get a little more profit. But in this case, we're just going to sit and let it do what it's going to do. We'll just go down through all the NASDAQ symbols. We know there's a spike, and that's where you probably see it. Got another one in that same same situation. So this is just a numbers game. The more of these positions that you can have on in relation to the size of your account, the better chance you have of hitting any one of these, because they all move independently. Just because the NASDAQ's up doesn't mean that the stock, here's a great example, NASDAQ's up and here's a NASDAQ product that's down. So that things do move independently. Now, of course, if it's Tesla, Tesla can influence the Qs very easily just by a 2% move. You'll see it reflected in the Qs, but we're not worried about that. All we're interested in is striking the wins, and that's number of occurrences. So every time that you make a sale, that's an occurrence. We're trying to target that yearly dividend. We're trying to collect that in under a year, right? So in this case here, let's look at one, what was that, MGEE? Wrong portfolio. Let's take a look at this in the classic version. We'll go up under under MGEE. Okay, so we're trying to hit that $1.48, right? And the reason for this, a lot of people don't understand. They're saying, well, I want to make 10% on my, on every trade that I make. And I said, well, that's great. But each price and each movement, each stock is different in the way it moves. If they all move the same way, then that might be a decent way to look at it. But when you're talking interest, you want to try to make as much as you can in occurrences. So when you add $1.48, and maybe you only have this 4 shares, but you can hit that 5 and 6 times in a year, and you multiply that by a portfolio of say 200-300 different stocks. Get your calculator out, and you can figure out how many occurrences that you're going to get per year. These move, but the further away you set your sell limits or your profit targets, the harder it is for you to make that profit. What we're looking at is the mean. If we look at this, if you just take a 6-month chart right here, here's the mean, right? That's our buy limit. We want to come back in there if we want to buy a second position for that same amount that we did before. So that's true dollar cost averaging, right? So our average would be in the middle. If we can hit this, see, in this case it didn't hit, right? We bought it up here, came down, for some reason we didn't get filled, but it went back up. We still made the dividend. So now if it goes back up and hits it, hypothetically, if it goes up and hits that, we get the full year's dividend, which only took us, what, January to whenever, however long it takes. Let's just say it happens this week. So you actually got 5 payments in one. So you didn't have to wait. Now, based on the size of these accounts, if you've got 100,000, then you can invest more. You scale up. When you're under 100,000, it's important to protect your principal. You can't stay in these positions long if you've got your whole portfolio wrapped up in this one stock. It's a lot easier to trade these with 0 commissions. This Interactive Brokers, this is $1 per side, in and out. You can go to E-Trade, Tastyworks, all the others have some type of 0 fee or 0 commissions on their trades. So it's a lot easier to target these numbers and hit these occurrences quicker. All right, so we're just waiting on the opening. about 8 minutes. Alright, got about a minute. Just kind of messing around here watching the Bitcoin go back and forth over the 56K mark. Alright, so here we go. Another push higher. Alright, let's see what's going on with the EOG. First thing we need to find out is if it's on our scan. And it is. So we traded that yesterday, I remember. So we'll go back to it. And it was on this other account. So we go to chart, EOG. Okay, so we're going to get back into it, but we're actually going to go, because we already hit it once, we're going to go down a little lower here. And check it and see what that, what the mean is. We're going to put it on the pivot point, 7113. All right, and what was the max shares on this? I need to highlight that. So it's 15. Okay, so we're going to put 15. All right, so we're going to go to, what did I say, 7113. So it's 2 shares because it's 10% of the max shares because of the size of the account. This trade will be good until Friday's close. 71. Looks good. Put that in. It had been there before, but we'll try to hit it again. But we're still, if this activates, we'll still go for the same $1.65 dividend. It's multiplied by 2, so it's not a lot. But this would be the second occurrence this week. So you get 2 years worth of dividends. You have to compartmentalize these into each trade being individual occurrence. Once you figure that part of it out and you get it in your head, you'll understand how that you can trade this and scale it up based on the size of your account. Because we don't know where this is going to go, this could just take off to the upside. You know, this trade will come off on, close of business Friday. I have a GTC in there, but I'll go back through and I'll close out all positions that I have limit orders on. I keep trailing stops on through until they're hit, or the system kicks them out. The whole idea is, we hit this yesterday, and you can see EOG up here, right, and sold right here. So that was like an hour and 5 minutes, right? And so it doesn't seem like a lot, but you start multiplying this by how many times that you can do this, and you don't have to watch this all day. This is just something you could have this on your phone if you're at work. All you got to do is put your order in and then let it take the profit. If it goes against you, then you have to understand what the rules are. If it continues on down, you're going to dollar cost average at the mean. Talk a lot about the mean. Everything comes back to the mean. If you're not familiar with statistics, you need to look into that. So we got this is a CEF, this is a monthly pair. So what we're actually doing when you make that that trade, you're actually getting paid a dividend quicker than you would even on a monthly. You're getting paid hourly on the dividend. I mean, you can call it what it is. So, well, that's a trade. And said, no, that was the dividend payment for the year for the amount of money that I invested, but I got it back in just over an hour. So maybe the light bulb goes off, maybe it doesn't. Maybe you have to trade it a few times to see it happen. Another CEF, this pays a pretty good yield. Yield keeps coming down though as the price rises. You have to understand that as well. But just continuing to, you know, for the first half hour, all I do is show you guys what I would do on all the other accounts. And then you can take it for what it is and apply it to your strategy, because if you have a strategy to get in and out, it should be that you don't want to take any losses. And how do you do that? You have to protect your capital somehow, right? Well, the old way of doing things was to put a stop in because you had way too much capital exposed to the market. I think this was a trailing stop that was put in yesterday. So you can see that it came in and it's trading just a little bit below that. But of course, there's only, one share. So you pick up $1.60, whatever, But when you start looking at trades, right, and then positive trades just constantly keep coming in. This is what we talk about when we're talking about occurrences. This just shows the last 7 days, right? So on top of that, now you're already ahead of the game because you're getting paid $53.15 today in your dividends. That's on the little scroll coming across the top of the screen. We know that we're getting paid twice on GHY, because this is a combination of all three of these accounts, right? So I'm just doing a summary or a consolidation of everything to show you the power of, I think there's just a little over 120,000 in these accounts combined, but as a whole, or individually, each one makes its own amount, right? So if you're spread out in different accounts. So if I start off small, showing people how to do this, you'll be able to handle a bigger account because it's just you have to scale it up. So, you're not sitting there looking at charts thinking, hey, what's this going to do? Like, this chart means nothing to me other than this is where I put my lines based on the 6-month average at the time of the trade, right? This could sit in this area for the next 6 months and never move, right? And the only thing I'm going to get is dividends. But if it comes down to this point here, the 50% pullback, guess what? I'm going to be in for, if this number is the same, because this max shares changes. It's an algorithm that I came up with. So make sure that your account size, you're not playing over, like if you're putting 50% of your money into one stock, the system doesn't work like that. You can take that's a lot of risk, and that's up to you how you want to trade. I would never tell anybody how to, invest their money, but I'm just showing you how to trade, how to collect dividends consistently and try not to take a loss. So let's go back over here to Mosaic. It's a lot easier to watch this as it's running, and you can follow it. I mean, I don't look at these all day long. That's the beauty of this system. All you have to do is put your orders in. This just gives you a better idea, how fast you can look around. But your decision should be made off of your strategy and not some weird looking. I love this one. I mean, that's exactly what you're looking at, right? So just putting a line in there, what does that mean? If it crosses this, that means you're going to sell. I mean, you can make this anything you want. Say, well, let's say it was here before it crossed there. Well, you would have missed that move, right? Resistance lines, stuff like that. It's like, oh, it's butting up against that. Well, it went above that. So it's, yeah, I guess if you were consistent with it, you could possibly use them. I never found them very good or very consistent across. If you just bought one stock and sat there and watched it all day long, maybe you'd make it work, because some have inherent characteristics. But overall, I think most of the stuff is junk. Moving averages, they basically tell you what you already see. That's why I don't trust charts. I don't look at all this information. It doesn't mean anything to me. That price right there means something to me. 652. That's what I'm paying. If that's what you're paying, you adjust that based on the size of your account and what you're willing to take or what you're willing to make in dividends. Other than that, I mean, all the hype that's out there, if you're following it, they've already made the trades. They've already been in for a while. Don't follow other people's trades. Follow strategies. People that are making money, consistently, they've proven that they can do it. Most people don't show their strategy. I'm showing the strategy out here because I've got several different strategies that I can use, but this is the most profitable. It's the safest. It doesn't take losses. I still trade. I trade all kinds of different things, but I don't do it in, how can I say this? I don't do it in a haphazard manner. What I do is I look at the size of the account that I'm trading and base my decisions off of that, because I'm risk averse. I do not want to take chances with blowing up an account. I don't want to take chances. I don't care how big the account is. If you've got $5,000 and you say, hey, they keep telling you, well, if you're young, just go ahead and do it, throw that money in there and let it ride and, trade crazy. And, that's what they want you to do. They want that $5,000 from you. Don't give it up. If you can make 10% a year on 5,000, you're just starting out trading, don't scoff at that. That's $500 you didn't have to work for. It's about, what's that come to? About 40 something dollars a month. Now you start scaling that up and you'll start figuring it out. But that's just if you sat on it for a dividend paying stock. And there's plenty of them out there. We can look at it while we watch the market, go up, down, do whatever. But you can see here's one. EDI, that's a CEF. If you're tired of, trying to figure out options or some other thing, you can look at this and say, okay, where's this going? I have no idea, but it stays consistent and it's paying you, what did I say? 10.5% on your money, right? It's a good investment. We'll go back over here to Mosaic because got about 15 minutes before we shut down for the day. I've got other things other accounts that I have to go through. And see all the alerts, but again, smaller accounts, you should really concentrate on CEFs. If your account's pretty small, I'd say under the 25,000, so you don't get caught in the day trading rules. You want to build it up. Once you're over that 25,000, then you can, have the luxury of trading more often. I mean, you can get away with a trade per day and still, if you're bringing 10% of 10%, that's 1%. Don't scoff at the small numbers. Everybody, I want 50% of my money. It's hard to do. Let me tell you, it's real easy to pull in, 1% per day, on your money, and most people don't get it because they think too big. They keep looking at lottery tickets, and Buffett didn't get there. Buffett started with, what do you say, like $1,000 or something like that, and he borrowed. Well, he got money from friends and family and everything else for $100,000, and look where he is now. Sure, it took him 50 years, right? But the whole time, he was making dividends and reinvesting that money, and it snowballs and it gets out of control. It gets to a point where he's got so much cash on the sidelines, they can't invest it. He'll tell you it's easy for a small investor to make money in these markets, period. Whether it's up, down, sideways, doesn't matter. But the key is dividend paying. Sure, you can play, options and futures and stuff like that, but you are going to lose money. If you're smart and you look at risk and make your trades on the size of your account, I give everybody, an idea on how to do it. All you have to do is implement it. Pick your own stocks. You don't have to pick what I'm doing. I have a scan that comes out that I put a lot of time and effort into, an algorithm that comes up with a scan that gives us stuff that, gives us a better chance of being successful instead of just randomly picking it or going off emotions. I've taken the emotion out of this. It's strictly a business. If you treat it like a business, you'll make money. People that treat it like a game, I'm just having fun. I can see a lot more better ways of having fun if I took $5,000. Take a vacation, buy a motorcycle and be crazy. Do whatever you think about, but it's a lot easier to, live when you've got extra income coming in, especially if you're young. I know a lot of people that watch these channels are young, and they're all caught up in the hype, and that's fine. But eventually you're going to realize that all that hype didn't make you any money. It made you feel good, and you had fun doing it. There's nothing wrong with that. Maybe you learned something from it, but some people end up with this addiction. They like to have that instant gratification constantly. And if you're young and you're listening to this, you better get over that quick, because it'll cost you in the long run. Had I figured this out, I've been trading for 25, 30 years, if you figure this out soon, you'll be in a much better situation. Just think, it's not giving up your time, but just giving up a small amount of the money that you would normally just blow. Well, take the risk. It's like, when somebody tells you that, say, well, how about you do it first and I'll watch and see what happens. If I don't know something, I will not take a risk on it just because somebody tells me it's a good thing to do. You watch it, you learn it, and when it makes sense to you and you actually see it, with your own eyes, not some, oh, hey, I've made millions doing it this way. It's like, yeah, they show you the fancy car. Well, anybody can go down and rent a car. I'm sure there's one or two that are out there, but it's always amazing to me how many people talk about how much money they're making, and then I'm kind of like, well, if you're making all that kind of money, it wouldn't be easier just to, if you had $10 million, if your net worth was $10 million, you could simply just stick it in the market and earn 4%, and you're making $400,000 a year just in dividends. You don't even have to trade it. $10 million. That's it. Well, people scoff at that and say, oh, you can't make any money like that at 4%. You're right, with a smaller account, you're actually, but it's 4% is 4%. And the value is the same, but the actual amount that you get back is not as big because the scale is larger. So you got to scale your account down. If you're trying to trade like somebody with $10 million, then you're gonna lose because they have a system in place and they understand their limits. Now, some of those people can get wiped out. It's happened before. There's some people that can bring it all the way back too. But I don't want that kind of stress in my life. I want it easy. I want it to come to me. And the easiest way to pull money out of the market is through dividends. The second best way is to make those dividends faster than what they're telling you they'll pay it to you in. Meaning, if this stock here, BGB, is paying monthly, I want those dividends like tomorrow or the next day or a week from now. I'm trying to beat it for the calendar year. If you can do it multiple times in a year, just think about that. If you're making 6.6% and you multiply that by 7 occurrences, or 10, let's make it 10. What's your take home? That's your homework. You just add them up. That's 60% on your money. So if you think it's crazy, but people want that. I want that 60% right now. It's really hard to do. Markets don't move like that. And this one's finally getting to a point where we can maybe chart it. But oh yeah, HIE, I think that's over max shares. It's probably why it's not on the chart like that. HIE, yeah, we're well over. So once it gets back up there, we're going to have to reduce this, because this number is probably going to come down a little bit, but we'll see. My tendency through my algorithm is the prices as they rise. The tendency for the algorithm is to put out max shares that are lower and lower. And it protects you, it protects the size of your account. So you're not, you're not putting all your money in, or a larger percentage of your money in at the top. It doesn't work in the reverse. As it goes lower, you're putting in, lower and lower amount, or larger and larger amounts of money the lower you go. That's not the way it works. But yeah, slow morning, which is fine. We like those mornings too. We can go do something else. We got about 6 minutes left. Anything stand in that and see what the overall market's doing. BTC's up over. Yeah, the overall market's really moving, but you don't see it in a lot of these dividend paying stocks. And it's interesting because you would think it would correlate, but it doesn't. You know, that's where people get confused. They're like, well, shit, my stock portfolio isn't going up as fast. Now, it would. I mean, if you've got the Dow 30, all the top stocks that make up the Dow 30, then it's going to correlate. There might be one in there that, you know, lags or whatever, but you got to understand they don't correlate to every stock. We can look at, let's go back over to the mosaic for a second. I mean, this is the portfolio, so we can actually look up favorites, and I just basically keep a couple in here. Yeah, you can see IWM. Well, that's Tesla. So Tesla's ramping up again. Yeah, this is where people get hurt, you know. And then the natural thing is, hey, you know, well, see, this wouldn't qualify for our portfolios at DCT because it doesn't pay any dividends, right? And it's risky. This is what you call speculative stocks. So if you're looking at this one, you're like, hey, I want to get in here at 7-Eleven, right? It's like, well, what's your portfolio size? Well, I've got $10,000. It's like, okay, so you just take your $10,000, right? And you say, well, I'm just going to go max in there because I know it's going up. So you divide that by, let's just say you get it for 712. So you can buy 14 shares, right? If you're commission free, hey, that's great. So what are you looking for? What's your profit target? What are you trying to get out of it? You know, are you looking at this chart saying to yourself, I know it's going to go back up here to 900. If you think like this, it's going to hurt you. Looking at stuff that happened in the past is not going to help you in the future, right? So if you look at it like this, if you're going to make an investment like that, what ends up happening is it stalls out. I'm just saying it can do anything. I don't know what it's going to do, but let's take each scenario. Let's just say you want to earn, you know, $100. So you got 14 shares. So you got 100 divided by 14 shares. So you, hold on a second. So 14, if you're going to make $100, how far has it got to move, right? So 100 bucks divided by 14, so 7. So it's got to move $7, right? So you got to go to what, 715, right? And that's okay. You could do that, right? That's a reasonable amount. But what happens if if it stays the same or never goes any higher, which it's unlikely with a stock like this, but let's just say it does. So you're just going to sit on it, right? Well, what's just happen? Just say they stop trading on Tesla for whatever weird reason. You got to sit on it. All right, so nothing happens. You don't get any money. Your money's sitting there. It's not working. Right? Well, what's the worst thing that happens? That sucker goes down to 500, right? And it goes down to 400. Then it goes down to 350. Well, now, what's your option? You're not getting paid dividends. You could sell it and say goodbye to 5,000 of your capital, right? Or what do they tell you to do? They tell you, well, if you buy it at 712, put $1 in below, right here, right? Oh, sorry. At 612, right here, right? You bought it here, 712, approximately. They tell you to take a loss. So you lose, if you got 14 shares, you lose 1,400 bucks. This is how people continuously lose money in the market because they think they know where the market's going, or they've looked at this. If it breaks above this, this is what I'm doing. If it does this, this is what I'm doing. If it does, you know, if I put the, what do you call it? Put a moving average on there, right? And if it does this, this is what I do. The last thing that they think about is how to protect their capital. So in this case, something like that, this doesn't even enter into our thinking. Why? Because it doesn't meet our criteria. First off, it needs to pay us dividends. Yeah, sure. You could buy one share here at $700, right? Or at 480 bucks, and you got lucky and it moved up here. But when were you going to take profit? Are you just going to sit on it and hope it went to $100,000? So, okay, you make $300 on this move, or 400. Say you make $400 on the move. Hey, great. So you try it again. Say, hey, I'm going to try it up here because you're getting itchy to make some money. It's been down, 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 down. So you're using candles now. You're like, hey, this candle looks like this candle. And round it goes. But you don't have a plan. You're watching these charts. You're hoping these charts tell you something. These charts will hurt you. Nothing is ever the same. If you could have this same candle week to week to week to week to week, I don't know who that is. Looks like a sales call. Anyways, but other than that, that's how people get into trouble in their trading when they're first starting off, because they think too big and they're wanting to jump on the bandwagon, and this is, I don't know if this is the top. Nobody knows if this is the top. All I know is, like this in particular, I will invest in the SPYs, SPY, Q. I'll invest in the Q because why? It pays dividends, right? So if I get stuck with it for whatever reason, but am I going to buy 314? No, I look at the size of the portfolio. If I've got $500,000 in the portfolio, then I look at the max share amount, and I say that's the amount that I can put in. I can put 50% on the first trade in, right? Because we have a specific amount. If I have under 100,000, then I can go 10% of my max shares. This is the simplicity. Okay, so we got a sell while we were talking. So let's go and see what account that is on. Let's take a guess here because I don't follow that. I'll take a look and see. Nope, must have been on the other one. It's on multiple accounts. So we look and see. All right, so that was a CEF that pulled in 994. That was RC. Okay, so first one of the day. Go a little over here to show what's going on. Let's go to the chart. Oh. RC. This is what we do. So now that we're out of the trade, we clean up our chart so we know not to mess with it. Get rid of our alerts. And that wasn't a CEF, that was just a stock. So based on the size of the stock, you can tell that the, let's see, well, hold on, let me back up a second here and make sure this isn't on the scan. Don't think it is, but it might be. Nope, not on the scan, so we forget about it, but it's off the chart, right? So what I do is go to the one where it's actually showing me the sell. I'm going to give this to our friends on Twitter. Just that way they can keep up. Go over to Twitter. We sold RC. What was the percentage on that? 8.4%. Yep. reason why I put it in there is 8.4% because that's just the yield. Now, if you have a larger account, therefore your max shares would be higher. It gives you more profit, you know, depending on the size of your account. 100,000 versus 200,000. It's not a big difference, but it is a difference. So it's funny, they're still waiting on the approval for that 1.9 trillion. The markets are already baking it in, I guess. But yeah, I'm just gonna hover around here a second and see if there's anything else. Go back to the portfolio. Got some that are spiking, but overall everything's just kind of hanging out. Nothing exciting. And yet Pepsi seems to be having some issues, but got paid dividends, so we're ahead of the game. I'll just annotate this one as well. Sold today, RC. Yep. Keeping our streak alive. As you can see, a lot of positives. That may or may strike, we don't know. We'll sit here and watch it. I'll give it 3 minutes. I like to stop on round numbers, just that way it's easier to find information if you're looking for it in your feeds. If somebody needs to look at something. All my trades are verifiable. You know, each month I'll put out a profit and loss statement from Interactive Brokers. I don't show all my accounts. I show these small accounts to help people that are just starting. People with large accounts with 1 million plus, most of those people are not managing their accounts, but if you can learn how to do this at a young age, you'll save yourself from, professional fees and everything else. They make a huge amount of money off of people that don't know how to manage money. Learn how to manage money, and you'll understand what Buffett did at a young age. They try to keep this secret from you because they don't want you being independent. They don't want you to think for yourself. What are you doing? What are you doing there, buddy? I think he's like 12 weeks old now. He's growing like a weed. But yeah, we'll sit there and watch that for the next couple minutes. We just talk about where, in my opinion, this U.S. futures up, the Dow 30 up 330 points. That's insane. When you see, in the past, when you see this type of move up in the overall markets, this spike, constant spiking, it's kind of a precursor to, what's to come. I don't know anything. I don't have a crystal ball. Don't really care to. Okay, so we have another sell. So we'll go for another, we'll go to the quarter after the hour because now I have to go back through here. Let's see, go back to classic. And which account was it on? On this other one. We'll go over here. So MGEE, $6.12. So we'll go to the chart. We do the exact same thing. Okay, come over to MGEE. We know it was 2.1%. That was the profit on the amount of money. And go to the chart. You can see it here. That was actually a DCA. You can tell by where the lines are and the one that's missing and the alert that's down on the bottom. Okay, so it was actually below the 100%. That's where our first trade would have been. Our second trade would have been somewhere down in here. So we remove all the Fibonacci's, which are just, they're guides. I don't use them as normal. Oh, and we sold MGEE on another account. Interesting. Okay, I'll have to look that one up and change that one up. So let's make sure this isn't on the scan. And it is. So what we're going to do is put our alert in at 6404. Just in case it comes back down, because it was on the alert or on the scan, so we can utilize it until Friday. Now it seems implausible, right? And say, well, it's never going to come down and hit it. You don't know that. It might go up here to 75. It might go down here to 60. We have no idea. But let me get that off there a second. I need to take a shot of that to send that to our friends on Twitter. I'm going to put that on Twitter. And we'll go over here, and so that was what, 2.1. And I'll go back over to the other one. Let's see, was it on this other account? Just out of curiosity. Nope. And we ended up with 597 on this one. It's still 2.1%. That will have different looking charts, maybe. Let's see, MGEE. Okay, so we can take a picture of that one. There it is, MGEE 2. Save that. And we can a little different. All right, so no longs yet. It's hard to get any longs, or I shouldn't say it's hard, but you'll see that when the markets kind of move up, and because things move independently, it can be tough to get in when the market's moving up. Well, that's fine. We like to buy more when things are going down. Let's check out this med link here. It never did come down far enough, but that's a pretty hefty mover there. But yeah, we like taking profits. And some of these max shares that have been in these accounts for some time. Remember, we don't add money to these accounts external to the profits so you can actually see them grow. This one here, BGH. Yeah, it's a slow mover. Let's go back over there to Mosaic. Okay, now this is interesting. Here's something for you to look at, because a lot of people don't understand it. So why isn't that hit? Well, a lot of it has to do with the spread. Go over here and look at it on this chart. Okay, you look at the spread, right? It's showing I've got a limit order in at 101.49. So I'm in between the prices, right? So nobody's bought it yet at that 101.40. It may or may not hit. You do not know. If it hits, great. Well, we'll sit here and watch it for a second. You can't guarantee that it's going to get filled. Chances are it will, as that price rises outside. We were looking at that bottom bid. If that bid comes up, it should close out. It just means that there more people are buying in from the bottom. They call it catching a bid. Right now, I mean, you've got a $1.05 spread on that. So somebody's going to pay a lot of, nobody wants to pay that kind of spread. That's what you see in addition, especially if they're institutions. An individual, it's going to cost you an extra $1, right? So it's going to affect your your average cost. That's why it's important to use limits so you don't get caught. So there's other ones on there as well. Just interesting stuff that you learn over the years. Yeah, holding steady there. But this is the gist of it. The system has worked well over the years. You know, you've had some hiccups here and there, but what I like to see is when this market really comes down, you'll see how well this will protect accounts. We might wait all day on this thing to activate. It may never activate. Who knows? But the more live trades that you can show, I think the more credibility it gives to your systems. Most people look at this type of stuff and they're like, you know, I thought I saw it live, and then you're like, did you really? put MGEE in there on the ticker. Let's see what else is going on. It's just going to sit there. Normally don't hang around this long. Yeah, this is a good one. I need people to say, if you're looking at this and saying it's going up, you're 33% correct. There's only three things that this market's going to do. It's either going to go up, down, and sideways. You have no clue. If you're telling yourself you know where it's going, you're fooling yourself. Get it out of your head. It's a hard thing to do because everybody wants to be right. But there's another example. You know, you don't know if that's going to activate or not. If you knew where the market was going, you wouldn't be looking around. You'd be like, oh, I'll stick my money in here. Yeah, the closer we get to the top, seems like the less, I say get to the top, I have no idea if this is the top or not, but the higher we go, it seems the less opportunities are out there. Union Pacific. May or may not go. We don't know. Yep. Well, I'm not going to hold my breath on, what one was that? Go back over here to Mosaic. Yeah, see? Back down. Right? All right, well, let me give 1 minute so we're on that 25. And we'll call it a day. Well, good luck with the rest of your day, and we'll see you this afternoon for the last half hour.